Good morning, guys. How's the audio now? Can you hear me okay? Okay, great. So if you'll give me just a second, I want to get I need to get the charts out to my client. It'll take me 2 seconds. And I will be able to start. Give me just one sec. I bet I saved it as... And I was afraid I did that. I need to correct it. The date should be 3/18. I apologize. I did them last night. And then let me... There we go. That's what I'm looking for. And I think I have gotten anyone. If there's anyone that I'm missing, feel free to hit me up, and I will send the file if you have TradeStation. So sorry for the delay. Let's get started here real quick. So we are obviously gapping this morning. Currently trading at 1856 and 3/4, and that puts us up about 6 1/4 points. Let me get my drawing tools. I was up way too late. Trading gold last night, and when I should have been asleep. So at any rate, and gold's just getting crushed all night and into today. So let's see, 1857 puts us right above Monday's highs. Okay, so first thing that I see is we're clearing Monday's highs. That was multiple attempts to get above Monday's highs. It would not be surprising to see us back test it real quick and then take off to the upside. Now, Globex high at 1859.50 is actually sitting in an odd place. I would have liked it to have stretched up to 1862 to 1864, where I think the true resistance is. And so, therefore, I am sticking with that. I usually would adjust the zone down, but it doesn't make any sense. If you look, if this is a break, right, above Monday's highs, I really don't want to zone at 1859 to 1857, knowing that 1856 was the high. There's just not enough there. So I won't trade for the rejection of Globex high. I want to see instead, I like to see, if I was inclined to go short, I'd want to see Monday's highs broken and then to retest to hold to the upside and look for a short entry that way. And that can come in multiple ways where we could end up with a short here. If the rotation is at least, once we come down to gap fill, if the rotation is at least 6 points up, and importantly, prior to gap fill, we don't come down, backside test, and then come down like this, right, to Globex lows, and then test again. Why? Because that would be one touch, two touch. So I am looking for a potential trap here. And if we do trap, right, normally I would expect us to trade potentially to the other end of the range. The caveat with that is it would be natural to have an attempt at gap fill out of the gate and then open up. So I would first look for responsive buyers here at gap fill for a push back up to Monday's highs should we fall underneath. And then in that case, I'll make a decision based on the size of the rotation. But I'd want at least a 6 point. I'd want at least a 6 point rotation, and so that 6 point rotation would dictate where I take that trade. Yesterday, I had mentioned, and I'd gone over in the morning, as I do every morning, what does an open drive look like out of the gate? So let's go over that again to make sure everyone gets it. An open drive, well, heck, why don't I just show it to you? Even better. And I'll just do it on a new chart quickly. Okay. So a couple of things about yesterday. I did not do a trade review last night, so I'm going to go over it right now, so everyone understands um, exactly what happened. So, unlike prior days, I believe 1846 was our Globex highs. So we gapped. So the first thing we're looking for strength, right? Half gap and full gap. There was almost zero attempt. We rotated down a point, I think, at the open. There was almost zero attempt to come in for half gap or gap fill. That was your first clue of the day. Secondly, first 5-minute bar marked the low of the day. Third, while we did get a little hesitation, if you can see right here, at Globex high, it was tiny. And then we busted right through. Okay, so when I see these first two bars like this, and I see that we've covered from 1842 to 1850, an 8-point move, right? And the speed and velocity with which it went with no rotations lower, okay? In the first 10 minutes, immediately I'm thinking open drive higher. So what am I looking for in that situation? As I said, if you're a conservative trader or on days that appear to be trend days up, I would at least look for a 10-point rotation up, right? Which would have given you location in this zone right here, number one. Secondly, I'm pretty much hands off, right? The time where trading gets easier on trend days up is after 9:30 in both directions, right? They'll tend to give you an entry in and rotations up. Also, if you look, right, this is another good, beautiful rotation down. Um, I was actually got a little greedy, I suppose, and went in at 1845 and 3/4. That was exactly the low here. It did hit it. Um, Over 800 contracts got hit. Apparently, I was late, even though I was almost half an hour early in putting in my order. Apparently, I just was behind the first 800 contracts and did not get filled at all, not a single contract. And this is an exact example where if you'll wait for the market, even on trend day up, to come back in and give you your trade location, that you can make a tremendous amount of money still. You don't have to chase it. Also, as JD pointed out to me, the zero tick, which I did not take, the zero tick worked out perfectly. It gave you a zero tick right here. And what was the clue of that? If you look at the NYSE tick, or heck, I can just insert it, right? Insert. Okay. Notice NYSE tick dropping all the way through, and we got to zero approximately right either here or here, somewhere right in here. Let's see. I'm going to say, actually, let's just find out exactly where the zero tick was so we don't have to mess with it, so I can show you precisely what I was talking about. This is zero tick right here. First time we hit zero tick, at least on TradeStation. That was through this basing period right here. And given it was at the top, and because of this, okay, so the reasons I didn't take this trade, even though it worked, we were already stretched from overnight lows was 1822. We're already stretched up to 1852. That's 30 points. It's a lot. I rarely see the market stretch more than 30 points, even in the overnight session. So this would have yielded you from 1852 to 1856 or 1851 to 1856. So it was a 5 point trade that was available. That's a good trade. I just chose not to take it. And the reason I chose not to take it is how far we were extended at this point. And we were right below the zone I wanted to take a short at, because you got to remember, sitting right up here, if you look at yesterday's chart, this is a 50 to 60% retrace still from I believe, and that was 1862. I'll go back and look at a moment, but this is a 50 to 60% retrace from the highs down to the swing low and then back up. Normally, I would look to launch responsive sells from this area and possibly launch swings back down to the short side. I would still expect that as a possibility. Just keep in mind that occasionally we can trade behind that 50 to 62% retrace high to low. Give me just a second here. Let me check. Hold on a second. Maybe that is the problem. Give me just a second here. Some people are having a hard time linking in, which would explain why everyone's having such a hard time. Hold on one sec. I'm going to take a pause for just a minute for those who wanted to enter. Obviously, the link, I got the wrong link down. I'm going to fix that. Okay, that should help some people out, hopefully. So let me go back through that really quick. So a couple of things. So I want to go over that one more time so everyone understands what we were looking at in the morning. This is the picture of Open Drive Higher right here, textbook. If you see this, okay, what the reason this did not follow through was because of the huge move we already had overnight. The move was essentially stolen, and I said I expected, because of the size of the move, that we would go into balance. And you see, we went through balance all afternoon, right? Balance over lunch is a nightmare to trade, and really it was just very difficult all the way through the course of the day. In addition, the clue that let us know that we were in balance, look at the tick. We were within plus or minus 500. Here's 500 approximately. Here's 500 approximately. Okay, we stayed plus or minus 500 all day long. And if you'll notice, that took place starting at 9:30. We got into that plus or minus 500 groove. Okay, so when we go to balance, the best place to locate for balance, right, is at the edges. Give you the best trade location. Also, when you see imbalance towards the end of the day, okay, it's possible to fall out of balance, but it's rare. Usually you end up with this, where it does pretty much nothing. So if you're short or long and waiting for either extension up and extension down, and you see tick looking like this, it's a bad bet, or a lower odds bet at the minimum. So I wanted to review that, particularly for my coaching clients. This is very common. You got to take into consideration the environment, right? It's a huge gap. There were shorts clearly at the open that covered, and then we went to balance. And that was pretty logical conclusion, particularly after we had a long liquidation on Friday, and normally after a very long stick up or down the following day, you'll expect balance. Okay, so generally I would actually expect a second day of balance, given that we're in front of Yellen, that this is the first day of a 2-day Fed meeting, and they're scheduled to release those notes tomorrow at 1 p.m. Central. So all of this added up to balance. I want to make sure, if you see this again this morning, assume open drive higher, right? If it fails, there'll be other trades, right? The first thing I look at, right, when I see this would be going, okay, if this fails, where's 10 points lower? Okay, so that puts me, if I was at 1852, that would put me at 1842. I would also take a look at 1832 from there, right? And I would draw my eyes to those trade locations, realizing that it's possible that I can get filled there, and that not only that, but those will provide me some of the best opportunities to make money. And usually these will line up often with zones, right? If this lines up right in front of a zone, then I'm usually inclined to take the front of the zone. If this lines up right behind a zone, I'm inclined to take the very back of the zone as trade location. Okay, so very important to realize that. And what this does is, if you'll get into the practice of doing this, right, you know, as they talk in sports about being able to see the field, this will open your mind up to the field. Same token, right? We could have gone another 10 up. There's no rule that says we can't, right? So go look higher as well and be open to either possibility. And then also look at your tick. If you see this, know that we're gonna trend, balance. And balance can look three ways. It can look exactly like this. There's no need to redraw it. Balance can look like this, where we're balancing, but we're balancing up, or we're balancing and we're balancing down. There's two more looks that balance can have. Open, first hour active to the upside, then come back down into the range and balance. Okay, meaning if we had an established range, unlike a gap. Or we can do the same thing, right? We open, we break below, come back up, and we balance in the range once again. So those are really this is a good example of 5 types of balance that are possible. It's almost always accompanied by a plus or minus 500 tick, and it stays there all day. When you see this, know that you're going to be bored in the afternoon, and you may just want to do research, read a book, go do something you enjoy, because this is all you're going to get. And unless you're scalping and you like scalping for, a point and a half, and you can actually manage to handle the stops that get taken place, then that's great. But most retail traders handle this very poorly. And in addition, what they do is they get very comfortable with this because the market doesn't run away from them. And as soon as we come out of balance, those same guys tend to give back all the money that they were making before, because they get comfortable with balance and they assume balance the following day. So that's my 50 cents worth of a point of view on yesterday and how that might play out. So today, let's switch back to today. And it looks like let's see, 1855.50. Okay, so I want to address this Globex high and the zone behind it, along with Monday's highs and Monday's lows, and how the trade might look around that area. So I believe I would be inclined, based on the past, that and the statements that Yellen's made, that she's not going to make any statements that are going to damage the market tomorrow. If she does, it would be a surprise, and we can deal with it tomorrow. But I think most traders are going to assume that she's going to be dovish towards QE. I think that's a relatively safe assessment. So if that's the case, if we open up, and right now it looks like 1855.75 puts us right into Monday's highs. Okay, super. So we'll find out really quick if we're going to come up and test Globex highs. Okay, and or if we're going to come in for gap fill. If we come in for gap fill, first of all, we'll be right in the middle of the range from yesterday. Generally, not the hottest place to be trading, right? If you're a disciplined trader, essentially, let's pretend like this would be a continuation. The market never closed. You're right back in chop, right? So where does this put the best locations to trade? Well, Monday's low still has not been tested. Let me verify that I'm correct on that. Well, we opened up out of Monday's lows and we never came back in to test it. Technically, you could look at that as a test of the prior day's highs. I'm going to go with Monday's low. Would probably love to be tested along with the Globex low. So two things there. I would expect responsive buyers, assuming we're going to get a 6-point rotation into that zone. So if we come in at 1856, right, and we reject out of here and we come in and we rotate all the way to the other end of the range, right, I would expect responsive buyers the first time into the zone. And those responsive buyers can either come at Globex low or they can come into Monday's low. Either way. I can't be clear as to whether it'll reject off of Globex low, and if I wanted to be certain I was getting good trade location, I would wait for the zone. But the zone is technically extended by another three ticks to accommodate Globex low at this point. It would have been nice if they would just went ahead and moved into the zone, but didn't happen. No big deal. The obvious thing that we're going to watch for out of the gate, right? We open 1856 and we get 3 bars up, or we get 1 solid bar. So immediately I'm going to think 2 things if I see Globex high. First of all, I'm going to assume end open drive and we close above Globex high. First thing I'm going to assume that we're driving higher, potential trend day, right? We had 5 down days. There's nothing that says we can't have 5 up days. Continuing with that theory, right? The best place for me to trade after this point will be approximately 9:30 a.m. Now, if I have trouble in the first half hour, right, and I don't want to get run over, I'm simply going to be patient and go, okay, I'm willing to forego the opportunities in the first half hour so that I don't take losses. If early losses throw your day off, there's nothing wrong with waiting till approximately the 9:30 a.m. What you don't want to do to yourself is put yourself in a position where you're in a lose-lose. You don't trade, but then you punish yourself for any missed opportunities, right? You need to make a decision and then congratulate yourself if you stuck to your trade plan, because your trade plan should be what is resulting in your wins, not trying to capture every single trade. One, by following your trade plan, whatever that is, puts you in control of your actions. If you're simply going to judge your performance based on what the market did alone, right, that puts you at the mercy of the market consistently. And that's a very stressful way to trade and very difficult to maintain a consistent performance for all but the very best traders, right? Most retail traders do not have a flow, and they can't stay in the markets long enough at a profitable level to ever observe the market in a relaxed, calm fashion, so that they can actually get into a flow over a regular period of time. Wanted to say that because I think it's very important. A lot of traders will try to do one of 2 things: either capture this, which is, in my eyes, very dangerous because it sets you up for taking the first opening ticks, and you get occasionally rewarded, but you also get very punished, right? And this is a perfect example right here. I heard from multiple traders who got buried on this particular day. They kept trying to take trades back to the long side. They figured because of the gap, even a gap fill, they would come back up and we would make new highs. And by 9:30 or 10 o'clock, they had buried their accounts. And for those who didn't have discipline or day stops, they took serious hits on this particular day, and they're going to need lots of open drives to cover the money they lost over here. So I'm not a big fan of trying to capture these open drives. I just as soon pass on them. So watch for the open drive, give it time to develop if that's the case, and either look for a nice fat stretch or wait till 9:30 in the morning. And as you saw yesterday with a nice rotation lower, the trade set up very nicely. Also with regards to the zones, if you look, there was actually a yellow zone yesterday approximately right in here, okay? And when a zone gets passed through without, and this is a 15-minute chart, by the way, let me switch it down to a 5-minute chart. It doesn't matter, I just showed you all the 5-minute chart. There was a zone here. When it gets passed through with no pause, assume when you look at that, that we're going to be able to trade through that zone. If this is the zone, here, I'll just draw it out. If this is the zone and it goes like this, and there's not even a pause here, right, where we consolidate in the zone before breaking higher, I assume that on the way back down, that zone is going to get passed through repeatedly. And if you look at yesterday's chart, you'll see that's exactly what happened. So once I see this, as that guy on Shark Tank says, I like it. He goes, "You're dead to me. This zone becomes dead to me. I'm not interested in placing a trade there." And that makes it great because it essentially lets me look to the zone lower, right, where I got great trade location. And it lets me be patient. I don't have to worry about it. So with regards to today, where would I look to take counter shorts? Really, possibly if I feel aggressive based on the price action, Globex high or just underneath Globex high, right? There's really not a zone here because we would have ended up stacking everything, right? If there's another zone here, we'd break, we'd be in, then we'd have another zone right on top of that. So that's why there's no zone. If you're an aggressive trader and it's in your trade plan to take Globex high on first touch, you'll have to be the determiner of that. I will most likely take a trade somewhere in this zone based on the rotation, barring an open drive higher. If it's open drive higher, I'm going to have to see the price action in this zone. I'm not necessarily willing to take one here, and it would open me up to, and I definitely will take a trade this morning at the 1869, 1867 level. But I would, barring the open drive, expect responsive sellers either here or here today for a move back to the downside. Keep in mind at the very top of the chart, and I don't think I tweeted out, these are the last two zones. I don't think they got put on the chart, so I'm going to be clear with those. 1872.50 to 1874.50, followed by the yearly high at 1877, excuse me, 1878. That might be in 3/4. If you'll check that to be sure, I'll check it after the meeting. So these two areas, I'm clearly willing to take a shot at the downside, as long as the market's showing me some inclination that we are rotating lower and we're not trending up prior to the Fed meeting. I don't expect us to trend up, and just like yesterday, I didn't expect us to trend up either, but I would wait for the evidence. I'm going to let the market dictate based on what I'm seeing, the behavior of the market. I'm going to let it dictate what my decisions are through that process. Let's talk about the trap trades real quick. I'm still doing good on time. I am going to wrap this up in 4 minutes, so I have time to prepare for the day, and y'all do as well. What the trap trades will look like, there's several areas. Globex high, Monday's highs. If we break above Globex high, break above Globex high, reject out of the zone, then close, actually close with a 5-minute bar in the zone, right? Technically, this puts my stop at swing high, okay? You'll have to determine what your own stop is. Oftentimes, I'll simply reduce size to be able to attempt to capture this trade, but often the way I'll handle this is if we close back above, I'll wait until we close back below a second time to take the trade. That is a trade setup for me. It's not one that I call out, and it's not one that I recommend for newer traders. The reason why, the zones have much higher odds of yielding that 2 points. Remember, my primary objective of these zones, right, is to get trade location. I expect a pause at minimum, and then a rotation lower, right? I will tend not to give this much more than 20 or 25 minutes to give me my 2 points. I generally hit my 2 points in 15 minutes or less. Okay, so by the time I get to 20 minutes, even if I miss the trade, I don't care. I don't care about missing trades. I care about protecting my equity because I'm trading so leveraged, right? The fewer losses I can take, the longer I keep my streak going up, right? And that's a distinction between someone who is focused simply on increasing their P&L, right, and increasing their trade account size, and someone who's determined and must make money because that's their mindset, and they're not focused on process, they're simply focused on profit. And for me, it's more precious to protect my assets because I get more than my share of great trades, and so I don't have to I'd rather protect that equity for days when I have home runs, keep my mentality very calm, not home runs, wrong word, great setups that actually rotate properly and give me the potential for having a very nice stretch to the downside. And if I miss it, as I did yesterday, I try very hard to focus on how happy I am that A, I didn't get stopped, and B, that I recognized, right, that 25 minutes that we were delaying in there. And there are many, many markets where if we delay in that 25 minutes, the next move is a bust up to the next end of the range, right? And that puts me usually at a 2 to 4 point loss. And I'd rather, it's more important for me to simply close the trade down and acknowledge that I didn't get it in my average time. If I went through an extended period of time, meaning months, where trades stopped working for me with this 15 minutes, what I would go back in and see, well, how long is this staying in the zone before it yields me 2 points? Perhaps we go to a time frame where it starts staying in the zone for 30 minutes, right? And I'll have either 1 or 2 months of evidence of that, and then I'll extend that out. If I've managed this properly, I haven't lost any money here. And again, if I'm focused on my primary objective, I worked very hard to build my trading account and I worked very hard on my discipline. This is a victory for me, not a loss. Same thing when I get tagged and I miss it by a tick, I don't sweat that, right? And a lot of times when people are selling trading services, right, you need to create hype so that people will keep coming back and paying you for your trading calls. I'm not trying to be a trading call service. What I'm trying to do is coach people on how to be successful and not go through either small boom busts or continuous just drawdowns of your account. Instead, I'd prefer to focus on the bigger picture of consistency and getting your P&L and your equity in your account going higher and higher and simply increasing your trade size. Okay, and it hasn't failed me in over a decade. I don't expect it to fail me through good markets and through crummy markets. And I don't expect it to fail me again on my stops. If I get stopped 2 times back to back, I'm done for the day. It's no big deal. There's a bajillion trades coming down the river that, for the rest of this year. And so any one day doesn't matter unless you make it matter. Traps on the downside. Let's discuss that really quickly. I've gone a little bit over from what I wanted to. Traps on the downside. If we break Globex low, come into Monday's low, and test back up, right? This could create a trap situation. Your stop really has to be below Monday's low at this point. You can also choose to swing low, right? And I have a specific method for entering these trades, assuming I don't get it out of the zone. In this particular case, if I get long out of the zone and I trap above Globex low again, I'm going to assume that we have the potential to travel all the way back up to Globex high. That means 2 things. At this point, when I get to Monday's highs, I will use that as a scale, but I'm going to assume, especially if this has already been tested one time, that we have the possibility of blowing through. One of the things that will help me determine whether we're going to blow through this zone or not is whether or not I lost my track of thought. Whether or not we're at a plus or minus 500 tick consistently, and that should start right after 9:30. So even if you're trading in the afternoon, which I'm not a big fan of, and if you are trading, you might want to reduce your trade size to compensate for the sloppier trade action, right? So it'll give your mind more rest, and you can stay with the trade till you hit your whatever your particular target is, right? If this is first time into the zone, I'm probably willing to take a trade here. If it's balance, I might consider taking a trade, but I won't call it out. The other way we can trap is if we break below Monday's low, come into the support zone, rotate back up, trap in Monday's low. It would be important at that point, obviously, that we also trap above Globex low. I would expect some resistance right in here first time back up, but if we can close back above, obviously a trip back to gap fill, where I would definitely have a scale because there's no guarantee that we get back to Monday's highs or Globex highs, right? By the same token, if I see us get below Monday's lows, just like last Thursday, right? Come back up and we do one of these jobs, or we get below the low and we consolidate like this for 25 minutes and make no attempt to get back above Monday's lows, right? Danger Will Robinson, okay? That's going to create pressure to the downside, and all of this all the way down to this gap fill needs to be re-auctioned. I would expect responsive buyers right here. And also, I need to increase this zone, by the way. Excuse me, I do not want to increase this zone. You're welcome to if you like. The gap fill here, the close was, as I show it, was 18.32 and 3/4. I always have it 2 ticks in front. I try to shoot right for the gap because oftentimes we'll trade just behind it, but it's also possible that we'll have responsive buyers right on top here and then push up, right? If we start to push up, while I might expect a pause here, right, I would expect eventually by the end of the day that we push back up into Monday's lows. Again, I don't think the downside is very probable, but possible. So a couple of people have asked me this, by the way, as to what I would consider the most essential zones. And so let me show you what I would consider the most essential zones, what that chart would look like real quick. And this is part of my own preparation. So spread this bad boy out. Okay, if I had essential zones, first of all, let me mark this so I know what the heck I'm looking at later. Okay, so I am going to, first of all, get rid of gap fill so it's not even a distraction. I don't care, other than I'm looking for it as a sign of strength, but I don't want it even mentally to register as a point where I might take a trade. I'm going to get rid of Globex low. Well, excuse me, I'm going to get rid of Globex low, but I'm going to leave it as a probably a small dash line instead, because I don't want to take a trade there. I'd rather wait for the zone to kick in and possibly the back of the zone where Monday's low is, right, for a retest. If we break, I would get rid of this zone, even though it is a zone, and target strong support, right? On the upside, right? Since we have Globex high here, if I were going to get rid of zones and assuming we break above Globex high and hold, right? Even though I'm willing to take a trade here, if I wanted to be certain, I'm going to do one of two things. Either I'm going to measure from wherever we open that we get 10 up, and right now that looks like we're actually backing down. We're at 1853.75, so technically it's possible that we've trapped people above already. So, but if that was the case, now with the open looking like it's going to be in the 1853s, this is still a valid area, so I'll leave this zone. And then of these two zones, I'd probably, let's see here, lift this zone right here and focus on this area up here as resistance. Again, this gets us back to the highs, and I would expect probably rejection. The first time there, that would be very stretched, and I would expect rejection. It wouldn't necessarily surprise me to be up here by tomorrow, by the way. It's certainly a possibility. I don't know what the probability of that is, but it's a possibility, right? On the downside, I would expect responsive buyers first time into this strong support. If we get underneath strong support, I'm going to lift the 1829 to 1827 and instead focus on the 1825 to 1823 and below that to 1820 to 1818. I don't have a zone here because I just don't think we're going to fall apart today, maybe tomorrow, but very important, this 1801 and 37 is a 50% retrace from the day we had the November Fed meeting all the way to the highs, and I would expect responsive buyers here, and also 1795 was a strong area, followed by 1790-92, and then 86-88, all the way down to 83, which is a 62% retrace at the bottom. So those are very extended targets, and something really bizarre would have to happen to get down there today. I don't expect it to happen, and I would expect that at some point this gets a retrace, and I would not assume, by the way, that we're going to break out of this, right? Again, what I'm hoping for and would be really very beautiful is a bigger picture balance, either from, I want to say, 1864 area, maybe a little bit behind, right? 1872 down to 1833. That would give us approximately a 35-point range, just over, which has been our normal balance ranges, right? Back and forth, with occasional breaks below. If it closes back in, it's essentially a trap trade, and you eventually expect it to go to the other end of the range over a period of days. It would be good for us if we could consolidate up here and then push higher from there. So we're 1 minute from the open. Draw your trend lines, guys, from yesterday, so you know where they are and where we're breaking. And again, at this point, at 1854, we still have a good rotation down into yesterday's lows. I would still expect responsive buyers down here. So that's the stripped down version. I hope that helped. Everyone have a great day. We just opened up.